Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of October 28, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was certainly a great week for Maryland mortgage rates. Maryland mortgage rates hit a 4-month low after the September jobs report. If you look at the bond chart on the screen, you can see bonds were moving higher, but then huge jump higher last week, 50 basis point jump. That was after the September jobs report. So that moved rates to a 4-month low. We are definitely going to recommend floating your Maryland mortgage rate to start the week and see if we can improve on this momentum. Now, what caused this drop in mortgage rates? Well, September jobs report 2013 came out from the Labor Department, and it was a stinker. Only 148,000 jobs created for September, well below the expectation of 183,000 jobs. So that was certainly not good news. Now, the unemployment rate did drop to 7.2%, which is a 5-year low, but that number, very misleading. The rate did not drop because people went back to work. It's because people stopped looking for work or took part-time work. Because if you look at the labor force participation rate, it remained the same at 63.2%, which is a 35-year low. And that shows the real number of people that are working. So we got to get people back to work. Stinker in the jobs report, but it did help the bond market. Bond market rallied. Interest rates went lower. Now, we also saw weekly initial jobless claims come out last week. They came in, again, bad report. Came in at 350,000 claims. That was above the 341,000 expected. And if you look at the chart on the screen, the red line shows you the trend. The trend would have been for lower claims, lower claims. Now we've reversed that trend, and it's looking at higher claims. That is a bad labor market, bad news for the recovery. Good news for mortgage bonds, going to move rates lower, but definitely bad for recovery. We got to get that claim down. Get people back to work. Now, the S&P 500 index, which is probably the best measure of the U.S. stock market, that hit an all-time record high last week of 1,754. And what it caused it, basically, stock markets rallying that the Federal Reserve is going to keep their quantitative ease or bond buying program going. They're going to keep pumping money in the economy, so the stock market is rallying on that news. And we also had some good corporate earnings. But be careful. We might see a stock market pullback as soon as the Feds announce they're going to really start tapering next year. That could cause a pullback, and it could even cause a crash because the market is on this high of the Fed pumping money in the economy. When it pulls that back, if we don't have a real strong economy to support the market, you will see a pullback, maybe even a crash, so be ready for that. Now, in the housing news, the Federal Housing Finance Agency, which is the FHFA, announced that they would delay implementation of their lowering of the loan limits for conventional loans. Now, depending on where you are in Maryland, the conventional loan limit is $417,000. all the way up to $625,000. Again, if you're in a high-price area. They are talking about lowering that limit, which would make the jumbo limit come down. So that would be bad news for people trying to get conventional loans. The good news is they delayed that for at least 6 months. Now, in the local news, the next free first-time homebuyer seminar is Towson, Maryland, is Saturday, November 16th, and that is from 10 a.m. to noon at the Sheraton Baltimore North Hotel on Delaney Road. You can register for that event by giving us a call in the office, 410-412-3319, or register online, www.marylandhomebuyerseminars.com. Now, if you need help getting qualified for a loan to buy a home in Maryland, looking to refinance, take advantage of these great low rates, give us a call, 410-412-3319, or apply online, www.prmidelaware.com. Look forward to seeing you guys next week.